Hey, this is Diggy here from ForexHabits.com. Today it is Saturday, it is 17 November 2012, and we're going to have a look at some indices and some currencies as per usual to try and see if we can find some trading recommendations for the week ahead. Now we're starting off with the Nasdaq 100 chart. This is a monthly chart. And at the moment in all markets, it's a bit of a difficult situation because we've gotten pullbacks that have been expected. I called for a pullback from around 2680, right about this level, to 2500 2 weeks ago exactly, and that came out perfectly. But the problem is now we're in this parallel up channel, as you can see, where it's touched multiple times here in 2011, it touched twice, and now it's almost touched again. That level is about 2480 to 2450, somewhere there. Now, the question is, do we hang around here and do we pull back up and do we make a new high, or do we continue, do we break down, and do we head towards this level, kind of the 50 exponential moving average or monthly, around 2200, or possibly even back to the 100 moving average? Now, both scenarios are possible, and with the fundamental situation around the world, I would say that it is likely that this channel will break, but until it breaks, it's not broken and the possibility for upside exists. That makes the technical analysis a bit harder to call. You can see the MACD histogram has crossed to the downside, but then again, it did that too over here, just barely, and then it based on this channel and had another rally. Now, Christmas is around the corner, and normally around Christmas you do get a rally. Once again, with the presidential elections, you also always expect a rally, and this time it did not happen. So this could very well be a Christmas with a lot of downside in the market, which would even possibly create a collapse early in the next year, in January, February, and a pullback straight to the 2000 level, which I do think is possible. But however, until this level is broken of about 2450 to the downside, until this level is broken to the downside, the channel is definitely broken, which is around 2440. When that breaks to the downside, this horizontal level here, you can also see 2440. If that is broken to the downside, then I believe there is a lot further downside, and then the first target would be the 50 exponential average, which would be around 2220, and then eventually the 2000 level, which is the 100 exponential moving average. So let's have a look at the weekly chart quickly, where you can see that this is still kind of bearish, and the 100 exponential on the weekly has not been hit yet, neither has the channel, so that is around this level, 2450. So I do think we will head there next week, and then the question is, are we going to base and bounce up from this channel, or are we not? For now, the upside that could be expected, it could be expected to go back anywhere between 2560 and 2600 in the next week. Now, if we can, and we can get a short around 2560 to the downside, with a very short stop, that would give like a 10-point stop to the downside, and we're going to see if that's going to work out. In the meantime, 2 weeks ago, I called that perfectly. From 2680 all the way down to 2500, we went to 2492, so that was a very good call. At the moment, it is a bit risky, and we could attempt a small short at around 2560, but I will put that in the comments below. Now let's have a look at the S&P index quickly. It's still negative on the indicators. It has closed just below the 50 average on the weekly, the exponential moving average, and I do think also, once again, we will still head lower to about 1320, between 1300 and 1320. However, there is upside potential in this as well, and that could go up anywhere between, very slightly, between 1365 and possibly even as high as around 1380. So that's something that we're not going to touch in the next week. We're going to wait to see how that plays out. We're going to see if it does base around this 100 exponential moving average, around 1320, and then we're going to take it from there. Now, the Euro US dollar, we didn't have too much action here in the last week. For now, it is also a bit difficult to call because it is in a position where it could drop down further, but it could also have a big upside potential, and that makes the trading week ahead kind of risky. There are some entry points where you could possibly attempt something, but once again with a short stop because nothing is sure. Now here, because of the fact that on the weekly chart it is under the 21 exponential moving average, I would expect that exponential moving average to hold as a resistance, and that we should head further to the downside, and we should still head to around 125, 124. That is still my opinion. So the upside should be capped at around 127.90. Last week I did do a trading recommendation where I called to go short 127.70 and a stop above 128. That did work out perfectly. It actually happened twice. I'm going to show you that now. Might as well do it quickly. Let's go into the 4-hourly chart. First of all, here we had the spike where it hit the entry point at 127.70. It dropped back down. I made a video of it at the time, and I said I moved my stop down to break even to see, because I did think it was going to go down. However, it did go back up, it got stopped out, but I re-entered the trade at 128, which is exactly what got hit. And from there, we dropped to just under 127. We closed the week at 127.40. So that was a nice call last week. I do think, however, that there will be more downside in this week ahead. So this is a daily chart, and once again, around 128.20 is still that level, that maximum level. If it does break up through there, it could go all the way back up to this trend line, which is at around 130. So should it go up to around 128, 128.10, we want to attempt a short with a stop just above 128.20, say maybe 128.30 there, somewhere there. For the rest, it might not even get there. It might just be capped by this 100 exponential moving average on daily and just continue to drop. So that's something that we're going to have to see. If you did follow the trading recommendation from last week, you could still be holding this from about 128, 127.70, and you could just move your stop to break even and see how it plays out. I do think there should be further downside. Now finally, the Euro Japanese yen, that did something interesting. Last week I called for a short at 101.80 with a stop above 101.20, which was about the exponential moving average level there. Now it blasted straight through there, and we did get stopped out there. So that's one of the reasons why you use stops and why you trade according to your account size, because these kind of things do happen. It just blasted straight through there, and it went to 103.60, which is very strange because it just decoupled from all the other things. Normally the Euro Japanese yen works together with the Euro US dollar and together with the markets, which were all to the downside last week. But the Euro Japanese yen just started moving on its own, and it shot up. And it's very likely that we're creating some sort of head and shoulders pattern here. We might drop back a bit and then actually continue back up with this Euro Japanese yen. Irrespective of what other markets do, it seems like the Euro Japanese yen is kind of moving on its own. So I'm not going to make too many predictions about that. If we do manage to break above the 104.50 level, around about here, this previous high, if it does break through there, we could go back up as high as about 106.50, 107. And the reason why I say that is on the weekly chart, that is simply the 100 exponential moving average, where you can see if we break through the 50 average and we continue going, we normally head up to the 100. You can see here as well, we head up to the 100. So once again, here on the weekly chart, the 21 exponential moving average has been acting as support. We've bounced up and down between the 21 and the 50, and now we've just poked up above the 50 average, and all the indicators are slightly positive. The RSI is about 50, the MACD is above 0, and the stochastics are above 0. So it's quite possible that next week we can head up to about 106.50 on the Euro Japanese yen. Now what you could do, I think it will drop down a little bit in the next week. It will drop to the 50 average, it should about. So you could attempt a long position on Euro Japanese yen at around 102.70 with a short 20 or 30 point stop loss, 30 pips, and riding that up to the upside to about 106.50. So that's a good risk reward. Once again, I'll put all these trade recommendations in the comments below this video. If you like the video, leave a comment, give it a like, give it a thumbs up, share it with your friends. Be sure to head over to the blog at ForexHabits.com. I do offer personal one-on-one Forex coaching where I can teach you how to do this analysis in the same way that I do, teach you proper money management, proper trading techniques to help you become a profitable trader in the long run.